Ladies and gentlemen, Bitcoin is currently seeing a bounce from the 38.5k support zone, and some people have flipped back bullish on this bounce, but I think they flipped back bullish too early. Bitcoin is still objectively in a daily chart downwards trend, and on the weekly chart, it is facing massive points of contention. In fact, the weekly candle close we saw yesterday was not particularly reassuring for the bulls, and we're going to discuss that in this video today, as well as discussing the lower targets on Bitcoin and whether they are still relevant in my opinion. Ladies and gentlemen, a full analysis on Bitcoin, logic, facts, TA, data. No emotion, no, oh, this might happen. This is the objective truth. Let's get into it. Guys, today we're going to be looking into the weekly candle close that we saw on Bitcoin. The importance of that, it did not confirm a reversal, and so the bulls at this point are preemptive. The bears as well, though, are a little bit preemptive in a way because it didn't confirm a weekly candle downtrend either. We'll speak about that. We'll speak about the daily chart, the massive predicament, really, that Bitcoin is in on the daily chart, just clamped between all these different lines. Then we'll discuss the weekly chart targets, 28k, 32k, 35k. Those are all the lowest targets that we've still got on the table. They're still valid until we break back to the upside on Bitcoin. And then we'll end the video by discussing the long-term cyclical trends on Bitcoin, specifically a developing trend that says that Bitcoin should be reaching all-time highs by November, December this year. Looking into the relevance that has to this move, because right now, of course, we're only in January. It's quite early on in the cycle, so we have to speak in that as well. So guys, without further ado, we'll get into that in a second, but we need to check out the VIP group first. VIP group on Telegram, you can find this information and results group in the description below. This group, of course, has the information and results for the VIP group chat. We trade altcoins 4 to 5 times a week on VIP. We also have a 24/7 community discussion group chat where we discuss the market openly with 120 members at the moment. So get on there if you're interested. PDF for trading results, 78.52% win rate. Excellent stuff. If you want to make money on altcoins, that's where you can do it. Guys, without further ado, let's get into it. So let's start with the daily chart here. What has Bitcoin done? Quick little recap. Well, it's rejected from the major resistance zone as predicted 12 hours before that breakdown. The ETF news released. It wasn't enough to bring Bitcoin higher. It was a sell the news event essentially, which was very much expected. Because we had a massive uptrend, and 96%, I believe it was 96%, maybe 97%, 96% uptrend with no correction whatsoever for 4 months straight. And so there was simply no one left to buy at that point. The sellers gained confidence again to sell, because when it comes to things like ETFs, when it comes to narratives like that, the narrative is all, the rumor is always stronger than the actual reality. Narratives are stronger than realities, and that's a simple thing about financial markets. You'll find if there is a narrative in someone's head, it has much more of an effect than when that narrative actually comes into fruition. So what we have now is Bitcoin drop downwards. It dropped down and reached our first target at 38.5k. When we were up here at 49k, we listed our targets. Our targets were 38.5k, which is reached. We then have targets of 35k, 32k, and 28k. Now, when I say targets, that does not mean I predict all of these targets to be reached. It's very important to note. I don't predict that all of those targets will be reached. I'm simply listing them as possible zones we could go to that would not damage the macro structure. Now, I personally do think that Bitcoin is still likely to go lower than 38.5k. I do not think that 38.5k was low enough. I think we will drop below that level. And I think the only thing that would make me not think that really, with a grain of salt, of course, because it could change. But right now, it's the weekly candle closes. What we have here on the weekly chart is very important, right? Because it's very important to note. Bitcoin now, after being in an uptrend for 4.5 months, right? 4.5 months of uptrend. It's finally broken below that uptrend. It's broken into a downtrend. What we're seeing right now, at the moment, we have no reason to believe it's anything other than a lower high. Okay, we have no reason to believe it's anything other than a bounce of support and a lower high before another leg down. There's literally no reason to believe it's not that at this point, right? I'm talking about charting reasons. You can build a narrative for anything you want, but charting reasons, there's no reason. We also have a scenario in which this was posted a month ago, but it's still true. Bitcoin's seen 260 days now. It says 232, but it's more like 260 days without a 25% drawdown or more. The last time Bitcoin went this long without a drawdown of that side was 2011. Okay, so Bitcoin was $1 the last time we went this long without a 25% correction or more. So it just goes to show that Bitcoin has just gone on an absolute brutal bullish rampage over the last basically year with no real drawdowns whatsoever. And in fact, people are not used to bearish price action. And this is very easy to identify. If you look at the last time we actually saw a break and a lower low, That was here in March 2023. It's been almost a year since the market has been exposed to any sort of bearish price action. Okay, so people are not used to it right now. People are in this mindset that everything needs to be super, super bullish, which isn't necessarily true. You know, perhaps in 6 months you can make that claim when the bull market kicks off, but as of right now, it's not necessarily true. You know, the market is still pre-halving. We still have 70 or 80 days until the halving. We very well can correct. We have corrected. We've actually gone down 21%. But I think more is in touch. And at this point, given the fact that we've done nothing but form a potential lower high, or nothing but in the process of forming a potential lower high, we do need to still leave those targets on the table. We'll get into those targets in a second, but I'll speak to you directly about what needs to happen for Bitcoin to break back into a bullish trend, because right now it's objectively not. For Bitcoin to be bullish again, what we need to see, well, realistically, I mean, if we're being blunt about it, what we need to see is a break of macro resistance, right? That's number one, because that would break a higher high. But if we're taking a more optimistic approach, right? If your finger's on the trigger, right? You'd realistically want to be seeing at least a weekly candle close above 43.8k. Now, why is that? Well, we have two red lines on the screen here on the weekly chart. These are the weekly candles. We have 41.2k, which is where we found support on a few separate occasions here, one candle close and two candle wicks. It's been a very strong support zone. If we look at the daily chart, it also comes up. And then we have resistance at 43.8k, which has been a resistance zone on two separate candle weekly closes, and also one wick on the weekly chart. So 43.8k is basically what's stopping Bitcoin from re-entering an upwards trend, because if you're looking at the weekly chart, we've been stopped, we've been knocked back down on two occasions from that exact level. So of course, in order for Bitcoin to be bullish again, we need to break a weekly candle close above that level and enter a long-term upwards trend again. Right now, what we are seeing, unfortunately, is consolidation at the top of an upwards trend, which is not always a good sign. In fact, it's a sign of exhaustion. So I want to make something very clear. You know, yeah, we've had this massive bearish candle. We also had a pretty bullish candle here, but ultimately, the weekly chart is showing that Bitcoin is still in a pretty neutral position, and the weekly chart being neutral leaves us to look at the daily chart. The daily chart doesn't look too good. So I think Bitcoin is leaning more bearish here, and I think that will be the case until we get a definitive weekly candle close above 43.8k, in which case we will continue the upwards trend. But until that happens, Bitcoin is leaning bearish, and those lower targets very much still on the table. And this is not going to change, right? This is not going to change until we get that weekly candle above 43.8k. This is just the reality. It doesn't matter if we go to 42, 43. It doesn't matter if we go to 45k. If we don't get that weekly candle close, it's just a wick. It doesn't matter, because overall, the daily chart is looking pretty bad unless we break 49k. You have to understand this, right? When you're looking at trends, you're doing trend analysis, and I understand this very well because this is what I've done for years, right, professionally. So trend analysis is very important, and it's actually very easy to kind of catch bottoms and tops. But trend analysis varies based on time frame. So right now we're in a situation in which, in order for the daily chart to look bullish again, we'd actually need to be breaking 49k. But obviously, we can't really wait till 49k to make a decision because that's too high, that's too far away, right? We'd miss out on all the move. So we're looking into it from a narrower perspective, which is the weekly chart. For the weekly chart to be bullish, we need to break 43.8k. Okay, so that's the reality. But we haven't done either of those things. So the daily chart looks bearish, and the weekly chart looks neutral. If one thing's bearish and one thing's neutral, at best, we're slightly bearish. So being slightly bearish, we need to consider those targets. What are the targets? Right? Targets are very clear. We'll look into them in a second. Let's take a quick break.
Ladies and gentlemen, here's a little news flash for you. You trust exchanges with your money. They get hacked all the time. They lose funds all the time. So the exchange you're using, you're actually trusting with your money. You're also paying them fees for trades. You're paying up to thousands, tens of thousands of dollars per year in fees. So you want to have a bloody good exchange, right? And that's why I have two exchanges for you guys, two options depending on your location, depending on what you want from exchange. The first one is Bitget. That is a KYC exchange. You can sign up from anywhere in the world, excluding the United States, excluding Canada, and excluding Singapore. Very low fees, protection fund, the whole 9 yards. We've also got Bingx. That's our second exchange, and that is an exchange you can sign up non-KYC from anywhere in the world, including every country, right? With a VPN from anywhere in the world. Again, very low fees, protection fund, everything you need in an exchange. Both of these exchanges are top 10 exchanges in trading volume. Sign up using my referral link below to get a 15% trading fee discount on both of the exchanges. Again, they'll both be in the description. Referral link is there. Get on the good exchange and become a proper trader. Don't use these trashy exchanges that you're risking your money and paying over in fees. Guys, let's get back into the video.
Starting with the most bearish target, if we take a Fibonacci retracement from the 2017 high down to the 2018 low, and we look at what's happened with the 2019 rally, which is the same part of a cycle that we're in now, right? It's the rally before the halving. We rejected from this teal line, we went downwards to the red line, right? Now that was a textbook rejection on Fibonacci. Again, rejected from a teal line, went down to a red line. We're not counting COVID because it's a black swan event. If we copy that, if we mirror that situation, which is possible. I'm not saying it's likely, but it's possible. Again, we have rejected from a teal line, and if we go downwards to the red line, that will take us to 28K. That would also line up with a retest of the Gaussian channel. You can see that the retest, that the downtrend ended at the touch of the red line and the Gaussian channel center line. That would be the case if we went down to 28K today, right? But that's a bit of a pessimistic target, I think. I don't think 28K is realistically that likely. I think it is a possibility, but I don't think it's that likely. I think that's a little bit too low. If we're looking at, but look, we need to discuss it, right? That's why I'm bringing it up. I wouldn't bring it up if I didn't think it was a possibility. But again, I don't think it's the likely target. If we're looking at more reasonable targets, we can look at something like 35K or 32K. All right, I think that's much more reasonable. Again, Bitcoin reached 38K, which is basically on the doorstep of 35 to begin with. But if we're looking at a cyclical analysis here, we can see we have a red line and a yellow line for each cycle. The yellow line is a resistance zone that is marked at the dead cat bounce of the bear market, and the red line is the support zone of the bull market, the supporting level that held up the bull market on each occasion. And you can see that in every single cycle so far, we have come upwards after the bear market, rejected from the yellow line, and gone about 3/4 of the way down to the red line. Same thing in 2019, came upwards, rejected from the yellow line, came about 3/4 of the way down to the red line. COVID doesn't count, it was a black swan event. And if we do the same thing here, we should be going to about 35K. And if we're looking at where the major macro support is, it's 32K. So ultimately, at this point, if we're admitting, which, you know, realistically, it's just objectively true, that Bitcoin is not in an upwards trend yet. I think everyone can admit that because that's the objective reality. Bitcoin's not in an upwards trend, it's in a downwards trend. It hasn't confirmed a new upwards trend yet, and so it is still leaning bearish, which means we need to consider the bearish targets. Where are the bearish targets? The bearish targets are sitting, realistic ones, between 35K and 32K, and a pessimistic target at 28K, which is still on the table we need to consider anyway, right? So those were targets, 35, 32, 28, right? So all of those targets could be reached, and all of those targets could be reached and still maintain the macro bullish structure. All of those targets could be reached and still maintain Bitcoin seeing a bull market in this year and next year. None of those targets would take that off the table. If we go below 28K, that's when we can start considering a macro bear case. But unless that happens, Bitcoin's actually still looking pretty good on a macro scale. I'm macro bullish, guys. Clearing that up, I'm macro bullish. I believe there will be a bull cycle after the halving. Conventional bull market, for the best knowledge we have, that's all we can really assume. Trade is your friend until it ends. It hasn't ended yet. The 4-year cycle theory is active. And so, yeah, but I will also say very clearly here that I think a lot of people right now who are flipping back bullish preemptively are not looking at the charts or the data, and they're going with these ETF narratives. It's the same ETF narrative that made people think we'd pump upwards to 53K or even to all-time highs, you know, from this January move, when in reality it was very clear that we were at macro resistance and everyone had already bought. There was no one left to buy. That's the reality, right? The same people who said we're going higher from there are the same people right now who say we're going higher from here. And I think, again, it's not impossible for us to go higher here, but the point is we are actively in a downtrend, right? So we have to keep in line with what the TA says and keep discussing the bearish targets until they are actually invalidated. Right now, I'll tell you something very clearly. Okay, we have developing trends, and we have more trends in this chart here, but there is developing trends such as this chart, which shows you that Bitcoin, from all-time high of the bull market to a break above that all-time high again in the next cycle, takes around 1,100 days. That's happened 2 separate times. For me personally, that's a little bit too close to be a coincidence, and we have other macro trends supporting those same trends. So this is more than just 2 data points here. This is actually a whole 4-year cycle range analysis here, supporting the idea that Bitcoin will be breaching all-time highs between November and December this year, or Q4 this year, let's say. And so with that said, if Bitcoin is going to breach all-time highs in Q4 this year, we have to understand that we're only in January. We're only in January, and we have a situation where Bitcoin's gone the longest period of time in 12 years without a drawdown of 25% or more. The fact of the matter is, if Bitcoin went upwards higher here and broke all-time highs, you know, before the end of the year, realistically, or let's just say before June, that would be kind of ridiculous. It would be ridiculous because it would be the first kind of step Bitcoin takes to invalidate components of the 4-year cycle theory, and we just simply don't have evidence to suggest that's going to be the case. Now, people will sit here and say, oh, but the ETF buying, that's not evidence. That is not evidence. That is literally just words. You're literally just saying things. And if you're looking at how much they're actually buying in comparison to Bitcoin's market cap, you will understand that it is not enough to push Bitcoin upwards 50%. That's not really how the market works, right? So, take what people say with a grain of salt. The charts do not lie. The charts always show you the truth. Now, the charts are not going to be correct 100% of the time. They're wrong quite often, actually. But I think, as someone who's done this for years, I can tell you right now that the general probability of charts being correct is around 75 to 80% of the time. Every ascending triangle, every wedge, every descending triangle, symmetrical triangle, they all have success rates around 70 to 80%. So generally speaking, if you extrapolate that, you're looking at charts correctly, you're looking at trends correctly, you're going to be correct about 70 to 80% of the time, which means that around 4 in 5 cases, you're going to be correct, or at least 75% of cases, right? So 3 in 4, you're going to be correct, which is definitely odds that I will take any day of the week, right? So the reality is we need to consider the lower target still. The reality is we failed that weekly candle close. It needs to get above 43.8K. I'm not going to sit here and say that the charts are massively bearish right now because we didn't break below 41.2K, but I certainly do think they are leaning bearish. Okay, that's the reality. And until we get that weekly candle close, they will continue to lean bearish and we will continue to need to discuss these lower targets. So guys, without further ado, thank you for watching the video. I hope you enjoyed. Please leave a like, comment, and subscribe. It really helps the channel. Check out the exchanges I listed in this video. Check out the VIP group. And finally, check out the Crypto Academy's Become a Trader course on this website here. In the description below, you'll find the website link. On the website, it tells you everything you need to know about the course, the unit topics, what they're called, what you get exactly, how many slides, how many videos, how many worksheets, how many hours of content, what exactly the course goes over, and the email address is on that course website link as well. Guys, if you want to learn how to trade, this is the place you can do it, and it's the best time you can do it as well going into the bull market soon. So get knowledge, because knowledge is going to give you the power to make money. Guys, thanks for watching. Hope you enjoyed. Catch you in the next video. Cheers.